So I guess probably some of you may have seen this presentation last year. Essentially what I've done is kind of updated it and also provided some ideas, or at least thoughts, that I've come up with for 2018. Okay. Sorry, I don't think it's the clickers. All right. There we go. So I'll just briefly say a little bit about Agnitio Capital. So we were founded in 2003. We're fully licensed, fully authorized investment bank based here in London, as well as Seattle. And that's my business partner in the front row in the white shirt, David Bloom, that many of you may know. We are pretty much exclusively focused on the game sector. Now, and just to kind of clarify, because some folks have approached me and or have identified us as a VC. We are not a venture capital firm. We are an investment bank. So what that means is we primarily provide merger and acquisition advice. So that is representing games companies in an exit or liquidation event. We also do larger fundraisings, really to the tune of sort of $5–10 million and above. I'll just fly through some of the deals we recently did. We sold eRepublic Labs in the middle of last year to Stillfront Group, which is a publicly listed player in Sweden that many of you may have known. They just acquired Good Game towards the end of last year. We also sold Babel Games to Stillfront just prior to that, towards the end of last year. We also sold Dragon Soul, the IP, which was developed by a US-based fast-growing developer, Pear Blue, to Gree. In fact, Shanti Burgle is in the corner there, who was working opposite us, which was an interesting transaction. Now, we do also make investments, and that's personal investments. So David and I have personally invested in some of the companies below. You probably have heard of Hutch Games here in London, which is a pretty successful studio. Flare Games, well, actually the new entity of Flare Games in Germany. Game Influencer, which is an influencer business in Munich, and Sviper, which is a early stage mobile gaming studio in Hamburg. I'm not going to spend too much time on these trends because many of you probably know this. The industry is getting tough, right? Everybody knows this. This has been happening for the last 2 years. Dominant players continue to get more dominant. They continue to crowd out the top 250, probably top 300, probably top 400 grossing charts, both on iOS and Android. And that's just because they have so much marketing muscle. They have a tremendous amount of cash, tremendous amount of resource, and they're just going to continue to drive CPI costs up. So that makes running a business, profitably quite challenging. But again, there's definitely hope out there, and there's definitely a lot of smaller to mid-sized studios we see that have carved out a niche for themselves, a specific genre of game, a specific maybe demographic or territories, and have managed to run fairly profitable businesses. The other interesting thing, mobile games remains and is continuing to become a larger percentage of the overall games industry. And that's only set to continue since the annual growth rates of mobile are higher than both PC or console. The other interesting thing is certainly at second half of last year, you've seen the emergence of a lot of Nordic listed, publicly listed players, and UC just spoke a little bit earlier on some of the challenges of being a small listed player, but the ones I'm referring to are some of the larger ones, such as Stillfront, such as Paradox, such as Starbreeze, as well as MTG, which is a media player. The Asian players continue to look opportunistically at European or North American assets, but frankly, they're looking at much larger deals. Companies that are generating over $50 to $100 million in revenue. So if you guys recall, literally this time last year, again, it didn't take a genius to really figure this out, but I said 2017 would be a fairly, average year, traditionally speaking. 2016 was an absolutely phenomenal year. I think that's, it's going to be very rare to match or come close to that, certainly in the next, 2 to 3 years. But at least 2017 was still above average year. It met the same figure as 2013, which was the record year prior to 2016. So at least that was a pretty healthy year. What was interesting again about last year was very similar to 2016. You had 5 large transactions, and those 5 large transactions comprised over 70% of the total announced deal value. And that's fairly similar to 2016. 2016 was actually higher. You had 4 deals that comprised over 84%. Another interesting point here, the last one. So all the acquirers of these larger players have been Asian, except for Activision, when they acquired King, and Aristocrat, which last year acquired both Big Fish and Plarium, that you might recall. So here's some valuation multiples. What are the acquirers paying for these larger companies? Again, I'm segmenting larger from small to mid-size, and you'll see why on the next slide. So again, you're looking at really an average latest 12 months sales multiple of about, let's say 3 times sales of the latest 12 months. And on an EBITDA basis, about 11 times. And that's fairly consistent and hasn't changed even with respect to the last 2 large deals done second half of last year with Aristocrat. In fact, the EBITDA multiples were slightly higher at 11.4 and 12.2. But the sales multiples were slightly lower. But again, you're talking about more mature businesses. Both Plarium and Big Fish have been around for some time. The other important point to note is when these larger transactions are occurring, because they're so much bigger, because they have very diversified portfolios, they're receiving the entire amount paid to them upfront in cash. And that changes when you're talking about small to mid-sized transactions. I'm not going to list out all the deals here because there's hundreds, and frankly, there's also several that are outliers or aberrations. But again, and it's important here to distinguish between what are these smaller to mid-sized players getting upfront in cash and what are they getting in earnouts. So upfront in cash, they're really getting about 1.6 times, compared to 3, let's say, for the larger companies in the previous slide. And in terms of EBITDA, well, actually, it's not too far off. They're getting about 9 times EBITDA. So that tells you that the acquirers of these smaller to mid-sized players are really focused on profitability. Probably not necessarily so much on sales, because they want to ensure that these smaller to mid-sized businesses are viable. They're not going to have to go back into their pocket and continue to fund these businesses going forward. Most of these deals, again, have a lot of earnouts attached to them. If those companies do phenomenally well, you know what? In some cases, over the next 2 to 3 years, which is the typical duration of an earnout, they could perform even better. They could get up to 3.4 times sales, and significantly higher in terms of EBITDA. But again, there's optionality for the acquirer when it comes to an earnout. So that means if these smaller to mid-sized players perform or exceed the targets that have been agreed, well, then they'll get compensated, well. But again, there's risk attached to that. So as I said earlier, larger companies are going to get a significantly more amount upfront and basically everything in cash because of the size and scale, which clearly matters. And because there's less and less of them available, those multiples, I believe, will remain fairly consistent. I'll be happy to hear what Shanti says in his presentation, whether he agrees or not. I do think that a lot of the smaller to mid-size, because of the scarcity of some of the larger players, multiples may in fact remain pretty stable and in fact potentially increase for some of the mid-sized players that can demonstrate profitable growth. Because there's just, again, frankly, not that many out there, particularly in Western markets. I think the other points we already mentioned. So To summarize, 2017, again, was a pretty decent year, actually, historically speaking, even though it was significantly lower than 2016. It matched 2013, which prior to 2016 was the best year on record for announced deal value in the industry. Still, like 2016, 2017, the vast majority of M&A was acquiring mobile game studios, but that, I believe, will change. I definitely think, given the competitive forces that are making operating in the mobile games market difficult, you'll see more transactions of PC and even potentially console. One interesting transaction, again, second half last year, was EA acquiring Respawn. That's the first deal EA did in almost 2 years. And again, a console player, of course, somebody that they're very familiar with. They had a long-standing relationship with Respawn, but it's good to see at least some console activity as well. As I mentioned earlier, Asian companies will continue to be opportunistic, but frankly, they're just looking at larger transactions because of all the resource and effort they have to put into any single transaction. The final point, and I'm going to talk in the next 2 slides about this, is really interesting, particularly from a European and North American perspective. And I'm talking about companies like MTG, like Stillfront, like Paradox, even Starbreeze, and very recently MAG Interactive, which just went public at the end of last year. They are aggressively looking at acquisitions of smaller to mid-sized studios. So that is actually quite interesting for a lot of the smaller to mid-sized studios, and probably some of you in the audience. So I'm just going to, kind of briefly describe some of these, because what is really exciting to me as an M&A advisor, and what should be to a lot of the smaller to mid-sized studios, including Alexis here, who just sold to one of them, good timing, is that basically all of these players, listed players in Sweden, were not acquiring any studios as recently as 2 years ago. Most of them were private, or most of them did not have an active M&A strategy to consolidate the industry. And what is really interesting is if you look at the market caps of these businesses, these are very large companies. These are not small companies. These are well-resourced, highly liquid, and can really, if they want to, fund transactions fully through cash. So the market cap of Paradox was $1.4 billion. They weren't even listed 2 years ago. Stillfront was basically a very small company 2 years ago. It had just listed in Sweden, and its market cap now is over $500 million. MTG, which is traditionally a media player, one of the largest in the Nordics, only started acquiring games companies when they did the InnoGames deal, which was about 1.5 years ago. And now they're very actively looking at acquisitions. They acquired Kongregate and Synapse Games, very recently at the end of last year, and their market cap is $2.8 billion. You have Starbreeze, which went public again, and is also being quite active. Made 4 transactions in the last couple of years. Their market cap is over $300 million. The last one, MAG Interactive, again, they're a little bit smaller. They just went public at the end of last year, but they are certainly aggressively looking at acquisitions. And in fact, they just acquired a casual game business at the end of last year, FEO Media. So that really bodes well for our industry from a small to mid-sized player, particularly in Europe, because none of these guys were even looking at transactions, as recently as 2 years ago. And they are very actively looking at folks and talking to folks, and David and I are involved in a number of discussions with them. I also thought, unfortunately, I don't know if you guys can see this. It's probably a little bit too faint. I should have used a bold font. But I've basically gone back, and what I've done here is graphed the share price performance of those 5 listed players. What is really interesting is if you look at 2016, which is really up until about the middle of the graph, most of the share prices have been pretty flat. And then in 2017, most of them go on, start to follow a very nice upward path, particularly in the case of Paradox and Stillfront. Those share prices have increased tremendously. In fact, they were 2 of the best performing shares in Sweden last year. So that is what does that really tell us? That tells us that, for once, as long as I can remember, and I've been in the games industry for 10 years, and I'm sure some of you in the audience have been even longer than I have, that tells us that there is finally a region that actually considers gaming companies an interesting asset from a public market perspective. And that has not existed in 10 years in Europe, certainly. And the last time I remember where there was some positive market sentiment in Western markets was when, Zynga went public, and we all know what happened there after they went public. So it's finally nice to see some public market sentiment behind these companies. Now, what does that mean for all of us? That means for people who are looking to get sold, you have public company market investors that are going to support their M&A strategies. So they can acquire companies using cash or shares. So that's really interesting. It gets me very excited. So even though people claim, the industry's getting super competitive, there's all these forces that are making it very difficult to operate, CPI's going up, all that noise and all the indie apocalypse that people keep talking about. Yeah, sure. That's still there. That's not going away. But at least now you have real capital that's going to be trying to find a home, that's going to aggressively look at acquiring and consolidating this market. Because we all know size matters, and we all know scale matters. What are these guys looking for? And even Asian guys, and even US players? Well, I mean, I don't have to tell this to many of you. You guys have seen a lot of the presentations I've made before. These are all characteristics and attributes that you should all know extremely well, especially if you've sold businesses previously, especially if you've raised money for venture capital investors or angel investors. I mean, the single most important criteria that they're always going to look at is who's on your team? Who's on your senior management team? Has your CEO sold or exited a company before? Has that team operated a top grossing title before, or shipped a fantastic PC title, or done a console title before? So that track record is absolute key, because it de-risks the proposition. Even if you're an early stage business, having that track record, particularly in a highly super competitive market, makes life that much easier, and to those acquirers to go to their board and get approval for consummating a transaction. Obviously now, in a highly competitive market, they're largely focused on profitability. So again, there's some acquisitions right now you see in the market that are probably driven more by profit, and some transactions are probably driven by growth. Fewer, but I think really that is becoming a very, very important criteria. Of course, for some of the Asian players, even for some of the US players, looking at geographic extension or expansion is obviously critical, particularly if they're looking to get into Europe, or acquiring specific skill sets, whether your particular skill or expertise lies in UA, live ops, genre focus, or having a specific demographic or audience that you've acquired over the years. And ultimately, what are all of these guys seeking is just more market share. I'm just going to fly through this, but I've met a lot of studios in the past year that frankly, I was amazed that they didn't really have proper advisors or licensed or authorized advisors, or really had, excuse the language, their shit together. So if you're actually going to go do this and pursue this, particularly trying to attract some of the top tier acquirers out there, make sure you have everything ready. Make sure you have all your documentation, financials, everything ready. Because as soon as these guys get serious, and if they find out that you are not prepared, it will make them nervous, and they will run the other way. So just really surround yourself with really good advisors, authorized advisors who have connections, who have done this before, who can really add value to your process. And finally, some 2018 predictions. As I mentioned, I'm going to start with a bright spot and end with kind of a slightly more negative tone. But the bright spot is what I mentioned, the European acquirers. I mean, that's fantastic. That hasn't existed, and that's just going to be great for the entire industry, particularly from the small to mid-sized studios. There will be definitely, I feel, a settling this year is the word I'd like to use. I think unfortunately a lot of studios who aren't able to merge with like-minded studios or who are having a difficult time given all the competitive forces are unfortunately going to fail. So what does that mean from a perspective of announced deal value this year? It's definitely going to be lower than 2017. So if you remember the graph that I had shown earlier on, there was $5.6 billion of announced deal value in 2017. I definitely think that's going to be lower this year. Where it's going to end up is anybody's guess. But I do think it's going to be lower. I'd like to be proven wrong. I'd like to see a lot of the European guys come out and do some big deals, but I just think given the scarcity value of a lot of larger or mid-sized players, it's just going to be fairly difficult. So yeah, that's it. Time for questions? Or?
We are running a bit late. Somebody's got a quick question, just one.
I think there's...
I've got quite a loud voice, so it's okay.
Sure.
How do you get paid? How does it work with a merchant banker? Do you get paid as as a kind of advisor, and then you get a percentage, or how does
Yeah, so generally the way investment banks work is we're predominantly success fee based. So it would be a percentage of the overall transaction.
What kind of percentage?
I'd like not to say, but because
range?
5 to 10%. Again, but that's dependent on the size of the transaction. Yeah.
Can you quickly define, in terms of team size and revenue, what constitutes a small size company and what constitutes a mid-sized company? And furthermore, what type of earnout can these small teams and mid-sized teams expect, considering that you said these are the guys that are going to have to be earning out while the big guys get to cash out right away?
I mean, that's a good question. I'm going to answer it in two parts. So for a smaller player, I would say really kind of, if you're not doing kind of 4 to 5 million, let's say dollars, let's put it in US dollars, since I kind of inferred your accent. So let's say it's 4 to 5 million dollars. You're going to be, that's, if it's lower than that, I would say it's going to be tricky, and ideally also some profitability. And then in terms of a mid-sized player, I'd like to say kind of 25-ish and above is kind of the threshold in terms of revenue. And then team size, I think, is less important. I'd say probably not lower than 20 people, 15 to 20 on the smaller end. Mid-size is usually going to be about 50 to 100, right? In some cases more, in some cases less. In terms of earnout, again, every deal is different, right? Every situation is different, and the factors involved, the criteria used to acquire companies are different, right? Each case is different. So what typically happens is, you could expect to get kind of half-ish of the total deal value up front. But again, that can also vary, right? The range can vary. It all depends also on how bullish that small to mid-sized studio is of its future, right? That also will affect your own risk or averseness to risk, right? If you really fundamentally believe you're going to have 2 or 3 year phenomenal years, well, then you're going to be prepared to take more risk, and you might take a lower upfront amount with an uncapped potential on the earnout, right? So again, that's why I say every situation is slightly different, and there's a lot of tactics involved. And again, we can have a conversation after about it. But yeah.